It's Brian Preston, the money guy.
What I do like, because this is a serious clip, especially when you have so much craziness, crisis going on. This is probably a good clip to bring it back.
More connects us than separates us. But in times of crisis, the wise build bridges, while the foolish build barriers. We must find a way.
So, I mean, look, first of all, couldn't we all just use a little help from our friends on reconciliation? Because the last few years have been so crazy. You guys know we don't do politics, we don't do religion on the show, and that's on purpose. That's deliberate because it feels like it's coming from all these different angles. So I loved how this clip talked about reconciliation, but then let's focus on how you don't fall into traps or build barriers in moments of crisis, and you want to build bridges through it like a successful person would, because there's a lot of ways that if you think about in moments of crisis, it's an easy way for you to fall in the financial ditch. We need to keep you protected. And the first thing I think about, Bo, is like emergency reserves.
Yep, that's exactly right. We know this stat, and this is from Bankrate.com, that 56% of Americans have a less than $1,000 in savings. So if you have a medical emergency, a car thing, a house thing, a kid thing, they could not come up with $1,000. Well, if you're thinking about trying to be able to build bridges in times of crisis, it is very, very difficult to do that if you don't have your safe money, if you don't have your emergency money in place. So one of the best ways that you can prepare for uncertainty or scary times, not if they come, but when they come, is to make sure that you have a healthy and robust emergency reserve in place.
There's also, I always get this moments of crisis. One of the easiest tools, it looks like it's really a mirage. And the fact that it's the easiest way to get across this obstacle you have, but it truthfully is a very shaky bridge that turns into a huge trap for you, is debt. Yep. I mean, because one of the biggest things I think about, you hear about the latte effect and people worried about consumption of little things. Where I see people really run into issue, not only on consumption, we'll talk about that, but it's some of the bigger purchases like vehicles.
Absolutely.
I mean, and this is a shock and awe moment when I saw the monthly cost of owning a vehicle. And it's not, and with all the inflation and everything, this has even gotten harder. But look at how big this has gotten for the typical person.
Yeah, what's really, really interesting is when you kind of break it down, the average, this is according to Credit Karma, Bankrate, and AAA, the average auto loan payment in this country right now is about $609. Well, you have to layer on top of that car insurance, which for the average American right now costs $89 a month. We know that gas prices are up. So fuel costs for the average consumer, average American right now is $232 a month. And then you have maintenance of about $100 a month across various things. So if you think about the average American driver in this country right now, they're spending over $1,000 a month to own and drive a vehicle.
And then it's not only the vehicles, because I know it's easy, because it goes back to that faking it before you make it. And you just want reliable transportation. You need to be in a phase of your life where you're not trying to get the wow factor. You're just trying to get the reliable factor of getting where you need to be. But there is some consumption, because I gave you guys a pass. I said it's the big life decisions, but let's focus on just the adding up the little stuff of credit cards. We know that the typical credit card of a person who carries a credit card balance is around $5,600. We had Daniel go a step further with what does that look like on a monthly payment side?
And I want to remind you, this is the average person that carries a credit card balance, not someone who's using it as a tool and paying it off monthly. This is a person who's actually incurring interest charges, carrying a balance. It comes out to about $5,700. And the average monthly interest rate on credit cards right now is a little over 20%.
Oh, goodness.
20.5%. So when you break that down, the average American on a monthly basis is spending about $73 in principal to pay off that loan and about $97 in interest because they often pay the minimum payment. So they're spending $170 a month on a minimum payment with $97 of that going to interest. If you're someone perpetrating that behavior, it is going to be so difficult to actually start building wealth because you are just throwing that money away. This is not something helping you build a bridge. This is in fact a true barrier to your long-term wealth building.
Yeah, so be very careful of debt. I've always used the analogy of treat it like you're using a chainsaw. If you have credit card debt, you shouldn't even be firing up the chainsaw, because we tell you can use credit cards, but you can't have credit card balances. That credit card debt is just so detrimental. It's basically like using a chainsaw with a blindfold. Do not use tools like credit cards if you don't have the discipline to handle them effectively. And that's this, by the way, we could expand this to student loan debt and other things, mortgage debt. Be very careful of all debt decisions. But I'm also, when we talk about moments of crisis, Bo, I couldn't help but think about there's another party in the room that has a huge impact on your wallet and your decision making, and that's the media. And you would think, hey, the media, the better advice they give or the most transparent or the most balanced, that would probably be good so I can make good decisions. That's not true. We know that what sells is fear. Scaring you, because they don't get paid for the health of your wallet. They get paid based upon the advertising or the clicks, the views, who's out there tuning in. And as a result, we have the age-old question, can the media even predict what the financial markets are going to do?
It certainly doesn't look like it if you look at headlines. Again, all the way from the Great Recession, 2009, until 2022, it seems like every quarter, every month, every year, there's a headline predicting the next scary thing that's going to happen. Uh-oh, watch out. Uh-oh, be careful. Uh-oh, this is coming. And yet, when you look behind the scenes and you actually see what the economy's been doing, what the market has been doing, it has been expanding. So if you're someone who follows the lead of the media and makes your investment and wealth building decisions based off the headlines, I'm not sure that you're going to be moving in the right direction. So in times of crisis, when things get scary, when things get uncomfortable, be careful who you let in your head, because oftentimes those people are barrier builders. They are not bridge builders.
Yeah, I mean, it's so much money has been lost trying to time the market versus just being the time in the market. I mean, there's a famous quotes on that. Don't count on the media to be your friend or your resource to tell you when you should be making behavioral decisions. There's a huge conflict of interest for them.
So, Brent, what I love is, we started the show. I love movies. I love movies. And I think superhero movies are fantastic. But hopefully you've seen, you don't have to be a superhero. You don't have to have some special power to make superhero-like financial decisions that can really blow you away, to where your future self, 10, 20, 30, 40 years will be like, holy cow, that person making that decision 20 years ago, they were the true superhero.
I do disagree a little bit in the fact that I think we have a Mr. Miyagi moment here.
Okay.
Is that, just like you see all the commercials and all the clips that have made Karate Kid famous with the wax on, wax off, I do want you guys to develop the superpower of being a financial mutant. It's just like, you didn't get bitten by a spider, you didn't get gamma radiation, but if you exercise your financial mutant muscles enough, you can see opportunity while everybody else is panicked. That whole Warren Buffett, be fearful when others are greedy, greedy when others are fearful. You can also become more disciplined where you're saving. We are giving you the resources. This is the abundance cycle fulfilled. This is why we are your Professor Xavier for you to start becoming that X-Men of finances so you can build more money, know what's coming in the journey. We can be that just wisdom that you look for to know you're making the right decisions.